This is the Oz report for September 13th now, because it's after midnight in Germany, 2025. And let's start, as usual, with Plex and Plex adjacent items, because we did see a 3% drop in Plex. And this is because there is a sale on Plex right now. It's a 20% off. And it's a sale again on Plex without the outlet of a New Eden store sale. So in essence, we've seen several Plex sales, and we haven't seen the demand side rise because of the New Eden store. So that's why we're seeing continued drops in Plex pricing. If you're going into JITA now or in the global market, you're seeing sell prices of 5.44 and buy prices of 5.23, and that is a new low since the introduction of the global Plex market. And some good, some bad about that. Overall, I think I stick with it that right now is a good time to buy Plex, because at some point I think CCP will break down and do another New Eden store sale. I don't think they're going to be completely staying out of the gamification, Omega gamification sphere, but we'll see what happens. For now, just maybe use this as an opportunity to stock up, to buy some Omega time, whatever it is that you do with your Plex. It is certainly cheap and might get even cheaper in the next few days as this 20% Plex sale goes through. What has risen a little bit this week, ever so slightly, you can't even see it on here, but overall from last week, it's about a 3% increase, is large skill injectors. And part of that is possibly because we have had a large number of ship balance changes. So a lot of people are extracting and injecting into different skills to fit different ships. And so we'll see if that continues. Overall, this is a drop in the ocean, since we were talking about weird sayings in chat earlier. So this is overall, it's not going to have a huge change. If you look at the skill farming formula right now, right here, we remember days where a 12-month subscription bought with Plex returned a profit, right? Not many years ago. This was maybe plus 1 billion, even on that. We're now talking about minus 500 million per skill farming account. And this is not realistic because actual skill farms use the massive sales. But as the massive sales are not happening right now, especially the Omega and MCT sale that CCP seems to have stopped, which was the big staple of a lot of not only skill farms, but that's how most players that Plex their accounts were actually buying Omega. As we're seeing that profitability go away, this might actually in the end have a positive impact on large skill injector prices. And when I say positive, I mean rising. So right now, skill injectors, very, very cheap. If you look at the history, it's been dropping basically all year from about 900 million to right now, we're under 800 million. Right now, the sell price in the Forge is 776 million for a large skill injector. So this is massively dropping. And as someone is saying in chat and said in chat earlier, yes, we have apparently a Vanguard event coming up where Plex might be dropped. Although I think overall it's not going to have a massive, long-lasting impact, because CCP wouldn't wreck their Plex price for an in-game event, especially not one for Vanguard, unless they are preparing a New Eden store sale, which would make sense in that constellation. But I don't know. You can speculate with me. Either way, right now we have large skill injectors cheap, but going up slightly for the first time in a long time, and we have very, very cheap Plex right now. Skill extractors, they started to recover last week, and they've continued their journey. So if you look at the graph right here. This is skill extractors. They're actually doing really well. So we're at 459 sell, which is a price we haven't seen in quite some time. So if you are with me long skill extractors, then this is a very welcome message, right? All right, let's jump into our dashboard. And immediately a few things we see out here is we see our 4 moon materials up 7% and our 8 moon materials up 18%. Now, two things here. One, we had Casimir on the show earlier. He hinted at this could just be alchemy, unrefined reactions, converting lower moon goo into higher quality moon goo. That is specifically in the game to keep the higher level moon goo prices in check, which is something that isn't often talked about, but is in the game. It only makes sense when the price difference is high enough, because these reactions take a long time. But this week we are seeing R4 and R8 come up, and yes, alchemy might be part of it, but also we are seeing a lot of movement in the ship space and in the demand and supply for ships because of the balance upgrades. And so there are several things that are making these prices go. Increased production might be one of them because of the balance upgrades, and so we are seeing rising prices for R4 and R8, which we haven't seen in a very long time. So this is a good sign, but it not sure if this is a long-term thing that's going to hold. Minerals are down 4%. That is pretty massive. Again, talking with Casimir earlier on stream, we were looking at the MER numbers. Goons are out in absolute force mining. I mean, they took number 1 and number 2 spot in their regions for most asteroid ore mined. And so clearly the supply side is doing well and minerals are dropping by 4%. Almost every single mineral has dropped since last week, with the exception of pyrite, as always. And then we have salvage seesawing, tier 1 up 8%, tier 2 down 7%, but that's something that we've seen the last week or two. We saw salvage drop massively by 40-50% because of the abundance of new exploration sites since the Legion expansion. And now, the market is trying to find the bottom. Where is the bottom? You have investors trying to figure out, is this the bottom? Can I buy now? You have large scale industrialists buying up long-term supplies probably, and then you're going to have some people that are going to speculate that prices are going to drop even more. But the prices have been going up and down the last 2 or 3 weeks, so at least there's an indicator of a first a bottom here, or at least a tier that we have reached. And to be honest, salvage is very, very, very low. So it's something that if it drops more becomes, I think becomes a massive problem because of the decreased profitability of exploration and ratting, which are two very, very popular things, especially for new players to do. And you want new players to have an avenue to make money. Colony reagents, this is basically magmatic gas, and it's up 30% this week. There was the balance patch also introduced changes to magmatic gas. The Metanox daily consumption was increased from 3,600 to 4,800. So that's a pretty massive increase. And at the same time, the volume of magmatic gas was reduced from 0.1 to 0.01. So divided by 10, which seems to have a lot of a big impact. Some of this could be speculation. Some of this could be people panicking and building stockpiles. Overall, you can say from everything that I have seen, there are a lot of stockpiles out there of magmatic gas. So I don't think this impact is immediately a reflection of a supply constrained. I think this is just people speculating on this patch. All right. Having said all that, let's jump quickly into the item dashboard and pick up a few more things to talk about. So on the trending upside, sure, magnetic gas up 30%. We just talked about this. We see vanadium here as an R16 moon material up 30%. That is pretty crazy. Yeah. But that seems to be an isolated thing. R16 overall are not moving this strongly. So this is either somebody just needing building stockpiles in industrialists, or or an isolated incident. I don't think there's any structure in vanadium going up 30%. Any long-term indications here. We're seeing a bunch of abyssal filaments going up 20 to 27%. The raging gamma and raging exotic. That's the tier 5, I believe, or tier 4 raging. Tier 4, tier 5 filaments. So people out there running filaments. That's depending on whether you like the fact that it's instant content, it might be a good or bad thing. This might be a good indicator that people are supplying a lot of abyssal materials into the market, and so at least you can see Triglavian ships going down in price. Not the nice tier 2 ones though, because the 0-point field manipulators are still up there in price. One ship that is always showing up in all of these is the Hecate. So you see the Hecate T3D, 18% up in price, only 0.2 trade days in the market left, and 95% of supply being bought out this week. So popular week for the Hecate, and people jumping on it. On the trending downside, you see the Retribution down 22%. The Retribution itself wasn't nerfed, but the Sweeple and the Confessor were buffed. And so I think people are just dropping the Retribution here. And the Vargar down 15% in price. That is big. The Vargar is a very popular ship, but Marauders were nerfed quite a bit. So this is people dumping their Vargars into the market, expecting them to be less popular. In the end, though, I want to remind people that do these rash actions with these patches. In the end, the popularity of a ship, I always say this, but I don't get tired of repeating this. The popularity of a ship does not indicate its price. Only the raw materials do. Okay, so just because a ship is more popular doesn't mean that it's going to be more expensive, because in the end, if the margin becomes bigger, people are just going to move in. Industrialists are going to move in, and they're going to create the supply. It's not difficult to build ships in EVE Online. And so in the end, it's just a shift in supply. It's all just temporary in these balance patches. None of this is going to stay there. It doesn't make sense to buy the Vargar or sell the Vargar based on its popularity. The only thing that makes sense is buying or selling it based on the raw material costs. And yes, sometimes you have situations where a ship itself drives the raw material prices, like we saw on the Barbaroga. The Barbaroga absolutely wrecked the 0-point field manipulator market, but that is an isolated incident. That's a very specific thing. If we're talking about, these ships that are using moon materials or that are using gas, typically they would have to have an insane push in popularity or be capitals, because capitals can have that push in the economy. Other than that, forget about popularity in terms of pricing. All right. On the highest trade volume, we see the Stormbringer and the Sin here with elevated volumes. And that's because they were buffed, and they're generally popular, so there's a lot of volume in them, not necessarily price, but volume. All right, I think that's it for today. I think we're going to return to the regular stream, and I'll see you guys next week on the Oz Report.